Welcome back, viewers, to another video where we are comparing stock exchange and real estate to know which one is better for you. Determining whether the stock exchange or real estate is better depends on various factors and individual preferences. Both investment options have their own advantages and considerations. Let's explore the characteristics of each. Stock exchange. Investing in the stock market offers several benefits. Liquidity. Stocks provide high liquidity, allowing investors to buy and sell shares quickly, especially in well-established markets. B. Diversification. The stock market offers a wide range of investment opportunities across industries and sectors, allowing for diversification of investment portfolios. C. Potential for growth. Stocks have the potential for significant capital appreciation, particularly when investing in well-performing companies. D. Accessibility. Many stock exchanges offer easy accessibility through online trading platforms, making it convenient for investors to manage their investments. However, there are also some considerations. Volatility. The stock market can be highly volatile, with prices fluctuating rapidly in response to market conditions, economic factors, or company-specific news. B. Market knowledge. Successful stock market investing requires a good understanding of financial markets, research capabilities, and analysis of company fundamentals. C. Risk exposure. Investing in individual stocks carries inherent risks, including the possibility of loss if a company performs poorly or goes bankrupt. Real estate. Investing in real estate has its own set of advantages. I. Tangible asset. Real estate provides investors with a physical asset that can appreciate over time and potentially generate rental income. B. Cash flow. Rental properties can generate regular cash flow through rental income, which can provide a steady source of passive income. C. Potential for appreciation. Real estate investments have the potential to appreciate in value over the long term, particularly in desirable locations or during periods of economic growth. D. Hedge against inflation. Real estate investments often act as a hedge against inflation since property values and rental income tend to rise with inflation. However, there are considerations with real estate investing as well. I. Illiquidity. Real estate is generally less liquid compared to stocks, as it may take time to sell a property and convert it into cash. B. High capital requirement. Real estate investments often require a substantial amount of capital for down payments, property maintenance, and associated costs. C. Market conditions. Real estate values can be influenced by factors such as local market conditions, economic stability, and demographic trends. These factors can impact the profitability of real estate investments. Ultimately, the choice between the stock exchange and real estate depends on your financial goals, risk tolerance, investment horizon, and personal preferences. Some investors choose to diversify their portfolios by investing in both stocks and real estate to benefit from the unique advantages offered by each asset class. It is advisable to conduct thorough research, seek professional advice, and carefully assess your own circumstances before making investment decisions. When comparing the stock exchange and real estate, it's essential to consider your investment objectives. If you're seeking higher liquidity, diversification, and the potential for quick returns, the stock exchange may be more suitable. On the other hand, if you prefer tangible assets, steady cash flow, and long-term appreciation, real estate could be a better choice. Additionally, risk tolerance plays a crucial role. The stock market is known for its volatility, and prices can fluctuate significantly in the short term. If you can handle market fluctuations and have a higher risk tolerance, stocks may be appealing. Real estate tends to be less volatile, but it comes with its own risks such as market downturns, property damage, or difficulties in finding tenants. Moreover, consider the amount of capital you have available for investment. Investing in stocks generally requires less capital compared to purchasing real estate, which often involves substantial down payments, closing costs, and ongoing maintenance expenses. Therefore, your financial situation will influence which option is more feasible for you. Another factor to contemplate is your level of knowledge and experience. Successfully navigating the stock market requires understanding financial statements, conducting thorough research, and staying updated on market trends. Real estate investing demands knowledge of property valuations, rental market dynamics, and property management. Consider your comfort level with each investment option and your willingness to educate yourself in the respective field. Lastly, don't overlook the importance of diversification. Spreading your investments across different asset classes can help mitigate risk and increase potential returns. Combining both stocks and real estate in your investment portfolio may provide a balanced approach, capitalizing on the unique benefits of each asset class. In conclusion, determining which is better between the stock exchange and real estate depends on your individual circumstances, financial goals, risk tolerance, and preferences. Both options have their merits and considerations. It's advisable to evaluate your situation, seek professional guidance if needed, and make informed decisions based on thorough research and understanding of the associated risks and rewards. To keep updated with the latest informative videos, please like this video, subscribe to our channel, and hit the bell icon to keep informed about our new videos.